Thanks and welcome back for the final session of Diggers 2020. Our first up speaker is Carl Simmich. Mr Simmich joined the Sandfire Resources Board in 2007 as the CEO and Managing Director and led the discovery and development of the company's DeGrussa and Monty copper gold mines in Western Australia. More recently, he's overseen the establishment of a global project development pipeline, which now includes advanced copper development projects in Botswana and the USA. Carl, welcome to the stage.
Thanks very much, Tim, and a pleasure to be here once again, and certainly feels like we're at the end of a very solid 3-day conference. But thanks for all of you that are here today. The story of Sandfire today is really a story of growth and transformation. We've obviously had a wonderful period of time in terms of our operations at the DeGrussa and now Monty mines. And as we're moving through into what is really the second chapter of this business, it is one of growth and it is one of transformation. So I look forward to walking you through that a little bit today at a higher level. Essentially, we've gone through a phase of reassessing our business and looking at our SWOT-C analysis and our strengths and our weaknesses, our opportunities, our threats and our constraints, and we have set our strategic growth plans and profile, and I'll touch on that in the next slide. At the same time, we've been looking at the skill sets that we need at board and management level, and have made a number of structural changes to that, and with people, and also the way that reporting structure works. So that is really gearing up this business to go into the next phase of growth. The last 12 months for us have been a record all over the place, record production, both in copper, gold, record costs at the lowest we've ever seen at 72 cents a pound, record revenues of $650 million, and cash and treasury, in treasury as we sit here today, together with liquids approaching somewhere in the order of $400 million. So up from that $291 million with a certain positive cash flows coming through over the last quarter, as well as liquid investments that are worth somewhere in the order of $70 million. So we sit with a treasury of some $400 million treasury in liquids. We've had an exceptional start to financial 21. The first 3 months of this year, the first quarter announced today was the record quarterly production of copper of just under 20,000, over 19,000 tonnes of copper for the quarter, and 11,000 ounces of gold. So really, really strong. And we expect to be at the top end of our guidance this year in terms of copper gold production, and more than likely as a consequence, relatively low operating costs. The focus of today's presentation will pretty much be really these new growth platforms that we have as a business. And as we go through from now until only the end of this year, which is not very far away, we have 2 feasibility studies that are about to hit the deck, as well as a gold resource with regard to our operations up in the old highway region, which is next to the DeGrussa mine. So the focus really will be, though, on the Botswanan operations that we're intending to make some decisions on very soon. So we're looking at optimising the T3 feasibility study that we picked up that project through the acquisition of Mob Resources about this time last year. At the same time, we undertook essentially three transactions in Botswana and Namibia last year, and we've amassed a ground holding, belt scale ground holding in the Kalahari copper belt of 18,400 square kilometres of ground. So it is a significant ground holding, of which about 12,000 square kilometres is in Botswana. Very excited about that, and at the same time, we have made an additional discovery, a new discovery, the A4 dome, which is only 8 kilometres away from T3, the T3 copper project. In the US, it's been a journey to get to where we are. We have seen the issue of the mining permit for the Black Butte copper project in the US, and that is the first new mining permit, hard rock mining permit, that has been granted in the state of Montana in 26 years. So it's been a long journey to get to that value proposition, but an important one. And what is also important to note about the US project, it's about a 3% copper ore body, is we have not spent $1 on exploration since we invested in that project some 6 years ago. Our expectations are, and we also constrained the resource that we utilised for the preparation of the mining permit, just to make it a little bit easier and simpler. So there's other resources available, essentially 2 other resources plus significant exploration potential in that region. And where we sit at the market, I think we are putting ourselves in this new chapter for Sandfire, putting ourselves in a very, very strong position for leverage growth. Also, whilst it is taken from the earlier speakers today, copper or nickel guys presenting to what has essentially been a significant precious metals gold forum in a sense. We really do believe with what's happened in the world and COVID and all those governments sitting there with expansionary platforms they're going to have to work through, is that economic stimulation, including building materials, copper, EVs, etc., is going to be a great place to be. So we want to build a significant pipeline to then leverage off for the many, many decades to come, and I think that's what we're doing. In terms of, I said at the beginning, we've reset our strategic initiatives. We have 5 strategic initiatives. We wish to create value through opportunity. Our 5 key strategic initiatives are execute delivery, sustainable production profile, accelerate discovery, ensure our people are aligned and empowered, and make sure that we optimise our capital structure and allocate our capital properly. In terms of execute delivery, we wish to optimise the assets that we currently have in our business. We have 2 operating underground copper mines, and we have 2 projects that are about to receive definitive feasibility studies and to move those into production in a time frame. In addition to that, we will also be looking at other sustainable production profile opportunities. To that extent, I would call it inorganic opportunities. So acquisitions would be something that we will be looking at very fondly at the moment, and we are currently scouring other base metal opportunities that might suit our investment criteria, and that would be in the sustainable production profile. We're also taking investments in other organisations, including we are the largest shareholder in a company called Adriatic Resources or Adriatic Metals, which has a polymetallic mine in Bosnia, now capitalised at $400 million, which we own about 16% of. So we have $60 to $70 million in liquids there. And recently you may have seen a small transaction that we undertook with Aurus Minerals, who's also a partner of ours because we're in a joint venture next door to us in the Greater Dulgunna region in Western Australia, where we are divesting our 80% of our Sam's Creek gold project in New Zealand to Aurus Minerals, and we will become their largest shareholder as well. So we're looking at many different ways that we can optimise, we can focus on what is critical to us and what is important, but at the same time to create some value from other opportunities in our business that might otherwise not be getting the attention that they should. So we look forward to Aurus making great steps with that project in New Zealand. In terms of accelerating discovery, we've got a budget for the next, or this 12 months heading to for June of 21 of some $45 million. We will be working very hard to be able to spend that money in that time frame, predominantly being able to get equipment and also just being able to logistically work in many of these jurisdictions around the world because of the COVID virus. So it does make it a little bit challenging, but we'll be working hard. In terms of our people and alignment, just making sure they do have the skill sets to bring on the right skill sets, they have those international capabilities to execute, because we will be operating significantly throughout the globe. And off the back of where we sit with our $400 million in liquids and treasury is to ensure that we invest that appropriately and in the right place and in the right balance between, and going through a growth phase of our business, but the right balance between debt, equity mix, returns to shareholders as well. So that's the blueprint, the reset for us, and we announced that to the market on 1 July. The only important thing about this slide is we do have, we're going to be across the globe. We've got 3 centres, 8 hours between EMA, Europe, Middle East and Africa, APAC or Americas will be operating, and we see this as the platform for the next 1 to 2 decades for us. And the only comment, other than having some international investment shareholders, I make the comment that at about a $750 million market cap and $400 million in liquids and investments, we've got an enterprise value of $350 million. And just to put it in some sort of context, DeGrussa, the copper mine, will probably produce $500 million in after-tax cash in the next 2 years. So something's wrong with that number, and it's giving our business zero value for Africa, for the US, and any exploration. So I think something needs to adjust there, and hopefully at some stage it will. Really the focus today is on Africa. It's on our Shikudu project, it's on Botswana and a little bit of Namibia. And we really have some significant opportunities developing there. It is a belt, the next slide I will show you, the belt scale potential. It is an emerging significant copper-silver portfolio. As I've said, we have 18,400 square kilometres in this region. It is a fantastic place to do business. It is extraordinarily safe. It's democratic. It's very stable. It has always been stable. Has got a wonderful support structures from the government. It is rated #1 in Africa to do business, and a very, very supportive government in that place as well. To give you some sort of context, there's not been a lot of mining companies that we're aware of that have operated there, so we don't know about it that much in Africa. We know a little bit about West Africa and other parts, South Africa, but Botswana essentially since independence in the mid-50s, a significant amount of that value proposition has come from the 2 largest diamond mines pretty much in the world, Rapa and Zhuaning, which are run by De Beers, essentially controlled by Anglo-American. So it's had that sort of mining level of development in the country with that sort of pedigree with the government 50-50 with Anglo in those 2 big mines. To give you a sense of the development by the country or the support, the government's currently spending somewhere in the order of $400 million US building a grid power line from Maun, which is essentially the gateway to the Okavanga Delta, all the way to a township that's just south of us, but essentially through the mineralised copper belt at their expense to unlock the value in that mineralised copper belt. This is really, from our perspective, in this growth opportunity, the money shot for the presentation and for Botswana, and where we see significant value. To put it in some sort of context, we would see that we can see multiple mining hubs here in this district over multiple decades, to get it in context. In the grey area to the northeast is our neighbour. It's a private equity group out of London called GNRI. Some of you will know them, and they run a project there called Khoemacau. Khoemacau has got about 7 or 8 different resources in those gold stars. They amount to some over 500 million tonnes of copper mineralisation at about over 1% copper and about 17 grams per tonne silver. So collectively, to get a context of that grey area, those gold stars amount to some 5 million tonnes of copper plus 400 million ounces of silver. 5 million tonnes of copper is near on just a little bit shy of 20 million ounces of gold equivalent, if you want to put it in some sort of scale. We have the ground to the southwest, that pinky reddy colour, all the way into Namibia. The strike length is almost 400 kilometres from west to east. Through the whole area. Through Botswana, it's about 250 kilometres in length and breadth of up to 160 kilometres. You'll see a clustering of stars as well. We have the T3 project in the middle. We have the A4 project, which we're delineating a resource for by the end of this year, and together with the optimised feasibility study for T3. All those orange dots are copper anomalism, all the blue dots, and there'll be multiple more priority targets for us at the moment. And as you can see, it's littered with mineralisation through the belt. The other important element of this is that the area that we have has not had much in the way of significant exploration because it has been sitting under cover of a thin calcrete cover. And we have the opportunity for domes closer to surface through the mineralised contact, and also shallow, a deeper mineralisation, as our neighbour is looking at a deeper mineralisation. The first mine they're looking to take into production is called Zone 5. It's 100 million tonnes of copper mineralisation at over 2% and about 22 grams silver. And they're putting in 3 box cuts and 5 declines, 2 of which are simultaneous, all at the same time. They'll be in production middle of next year. So it is, just to put it in perspective again, significant. It is belt scale size. So what's happening there? We've picked up through the acquisition of MOD, we've been going through a process of optimisation, their feasibility study on the T3, and we've really come to a stage where T3, it'll start off with this T3 mine, but quickly through the optimisation of that project, but also because of the discovery of A4, which will, as I said, will have a resource delineated by during this quarter. Essentially, we will be moving into an expansion case of somewhere in the order of 5.2 million tonnes, and we'll establish the initial development so we can springboard quickly to 5.2 million tonnes. So that is in process at the moment, and in that hub area, the mine will be called Mateo, meaning in Setswanan, meaning foundation mine, foundation stone, and we will start from there. And we see many other opportunities, particularly A1T1. T1 has already got an underground resource on it for copper. A1 is a high priority target with geology looking very, very similar to A4, and we're just about to get in to drill that, but multiple other targets in that region and within trucking distance of some 30 kilometres essentially from that hub, a concept that we will develop. And we do also believe there'll be more than one hub. There's certainly our neighbours to the northeast, there'll be us around T3, and we see some potential down to the southwest as well. Schematic of what the plant will look like, pretty simple, stock standard for this sort of processing route. Essentially the points, we will be laying the foundations for essentially a 5.2 million tonne throughput rate, and what you see in terms of the pink areas, a couple of additional bits of equipment that may be required, certainly an extra mill, a ball mill, maybe another thickener, and extension of the con shed to go from 3.2 to 5.2 million tonnes. Pretty simple stuff. Just focusing a little bit on T3, where are we at the moment? We're optimising that feasibility study. We expect that to be out by during November sometime. We have environmental approvals. The government has told us they will take no more than 2 months, it's normally a month, but no more than 2 months to receive and process the mining licence application, which we'll expect in the third quarter financial, but the first quarter of next calendar year. So by the March 21, we expect to commence construction in that second quarter of next year. We are well advanced in funding, but with Treasury of $400 million, clearly we're in a good position to move forward, but we're also well advanced with European, English and South African bankers, and we've done a lot of work in terms of early engineering. All final mine designs, plant equipment, tailings, access have been almost completed, as well as tendering of the key elements, which will be the open pit mining, where we have now completed the tender of that. We've completed the tender of the EPCM construction works, and essentially have short lists of people that we'll be awarding as soon as we complete the DFS and have board approval, which we expect in the middle of November. So a lot has happened. In the general regions, without spending too much time, but essentially in the middle there you'll see T3. To the bottom of the screen, the A4 dome, it's this dome structure. EM works really well, and as a high priority target to the north of the top of the screen is the A1 anomaly, and we're looking forward to getting in there and drilling that pretty quickly. And the objective here is the T3 project is around a 1% copper ore body and about 15 grams per tonne silver. A4 is looking to be 20 to 30 to 40% higher grade, and so what we're talking about here is scalable operations at a reasonable production profile. So if you can get to 5.2 million tonnes at 1.2% throughput grade, putting the silver to one side, you're talking about a plus 50,000 tonne per annum operation for a decade or 2 decades potentially. So that's the sort of scale, minimum sort of scale we're looking at, and we would not be surprised if this belt can yield double of that or triple of that over a period of time. We've just got to go and do the exploration, as I say, on that 12,000 to 18,000 square kilometres. And it responds very, very well to airborne EM or EM. We are reprocessing some EM, but we are also flying some new EM very soon, as soon as we can get an aircraft in there. This is a little bit of drilling around the A4 dome, and there is also, initially MOD made some interesting intersections at depth. We stepped back and looked at it after the merger or the acquisition, and essentially looked at some shallow material and got some great results here. Essentially this will become a resource, and that will come out shortly, but highlight results here of, I think it's up to 5% copper and 124 grams per tonne silver. So some really, really, really chunky results. The average grade on what we're seeing is well and truly above 1% copper, which in that sort of area is well and truly good payable material. And in addition, around that area, significant other opportunities. To give you a bit of a sense of this contact zone, the mineralisation forms along what we call the NPF contact zone, which is that dotted line you'll see on that diagram at the bottom. And essentially where we are at the moment, up the top in the middle there is the A4 resource, and we haven't really looked at any material at depth. So there's significant opportunity for mineralisation at depth to expand these things. The focus for us will be looking for higher grade material to create enhanced value of the project very, very early, but essentially we're also then looking for scalability and for greater volumes. But prioritisation is higher grade material and then also volume, increasing the value proposition, also increasing the longevity. Just quickly touching on some operations. I don't want to spend too much time other than that little mine up the road, DeGrussa, and also it's the Monty mine have so far in the last 8 years produced over 500,000 tonnes of copper and 300,000 ounces of gold for revenues of, and we've heard about lots of other new little discoveries coming along, so they're fantastic, but we've had revenues of over 4 billion and free cash flow of about $2 billion. And in the last year, the mine produced a 63% free cash flow from revenue. So really strong, produced over $400 million in free cash from the DeGrussa mine. Paid lots of dividends and accumulated profits. So it's been a really good journey to date. We are going through a stage where, as I said, good production this year, record for this first quarter. But what's really interesting for us is we've got about 2 years from the current known copper resources that we're working our way through, and we'll have a very good year this year and next year. But we will be transitioning from what we can see at the moment into a gold operation. We've gone back and given the environment at the moment, the gold price, and have re-looked at our original target in that region, which is why we were up there, gold exploration. We're only 30 kilometres away from Platonic, and we've gone back to the old highway project, which we're currently drilling out. We'll have a resource for that. We've been working hard. We've done 35,000 metres of drilling, and we'll have a gold resource on that during this quarter as well. And together with blending that with a retreatment of our tailings, which we're doing work on as well, we're drilling, which will run at about a gram per tonne gold, is we see an opportunity to run for a gold a processing opportunity of probably a 5 to 6 year operation, possibly more, possibly order of magnitude in the 50,000 ounces of gold a year type of number. And what that will do is we'll keep the operations at DeGrussa operating. We won't be putting anything on care and maintenance. We'll continue to operate. We'll have another 5, 6, 7 year mine life. And what we will do is continue our exploration in that region. So we'll have DeGrussa as transitioning into a gold operation from a copper operation, and it's not going to be it won't take much time, and it won't be difficult. Land holding, we're still very excited though about exploration in the region. We've still got 7,000 square kilometres in the region. We are in the top 10 tenement holders in Australia. We've got lots of stuff in New South Wales as well. We are the #1 tenement holder in Botswana, but in Western Australia here we've got 7,100 square kilometres, and the strike length between DeGrussa, Monty and heading down towards Morkwell, the 3 different sulphide mineralised centres we've discovered, 2 of which are mines. And if we just put it in perspective, DeGrussa was 5.7% copper grade as a resource, and Monty was over 9% copper as a resource. This is still significantly prospective, even though we have spent quite a bit of time up there and a bit of money, and we were using some new techniques, looking at some new areas that we haven't spent much time on as well. So we'll keep pushing ahead of that. And as I said, $45 million in exploration, $20 million in Western Australia, $20 million in Botswana or thereabouts, and a little bit in the US and a little bit in New South Wales. In Black Butte, just to not mention it very briefly, we've completed the environmental impact statement, so that's all been approved. We have the mining permit. It's called a record of decision in Montana. And it is, but that is now subject to a legal challenge, which is not surprising. It's almost a way of doing business in the US. Legal challenge is quite a feeble one in our view, and we think it'll take a little bit of time to massage our way through that. Order of magnitude, it's probably a 2-year process. And what that will do for us is enable us to focus our attention with the business in Africa, on Botswana, to move that along, get our gold operations happening here in Australia while we continue to explore, enhance the value of the US project while we go and try and bring in those other 2 resources that we've got into the mine plan, but also then do some exploration in the US. We have presently, through one ore body, already 400,000 tonnes of copper. One of the ore bodies that was excluded before we lodged our mining permit is another deposit called Lowry for a couple of 100,000 tonnes of copper. So this will lend itself to a growing proposition, and we'll work on that over the next 2 years. But we're very excited because value comes from getting a permit in the US. And as I said, the first one in 26 years. So we're starting to create that value proposition there. So where we are, really good strong foundations, great strong balance sheet, great network, great relationships with people to move our business forward into this next phase. And underpinned by this production, which will be running really hard through that copper space. But we're really excited about the opportunity for a significant prospectivity in the region that hasn't been explored to any great extent in Botswana, and bringing on the first mine, but we think an expanding mine, but then other opportunities in that hub within that 18,000 square kilometres of belt scale. We'll continue to explore aggressively. We love exploring. We'll continue to look for investment opportunities or acquisitional opportunities off the back of the balance sheet and our relationships, and we're looking forward to the future. So we look forward to making the transition and gearing up as a business. Thanks for your attention today.
Thank you, Carl. We won't have any questions and jump into the next one.